Good afternoon, traders from around the world. How are each and every one of you doing on this fantastic day, night, evening, week, year, wherever you are watching this from the world, wherever you might be? Thanks for being here. Today is Monday. In fact, it is Mentorship Monday, the 12th of June, 2017. It is noon o'clock right now here in Nashville, Tennessee, 1 o'clock Eastern, and we have another hour of trading together. Let me kind of give you an idea of what the next hour looks like. So what I'm going to do is we're going to look over the stocks we have right now, see if there's any trades, let you know what I did to Tesla while I was on a quick lunch break, and then to kind of discuss and talk about if there's any other trading opportunities. We'll look through a few other things, but the questions that I got the most today, went back and reviewed them, were about moving averages. So after we review all the stocks, we'll talk about moving averages, which one I use, why, and how to use them. Does that sound good? So type it in one if you're still here and you're still able to hear me and see me okay. And we are recording this session, so we will start rocking and rolling it. Jonathan, Ben, Thomas, David, Ken, Walt, Linda, Chandra, Joel, Benoe, Lily, fantastic. All right, so everyone can hear me, great. Terrence, I love this. Philbert's still here and Daryl as well. All right. Let's look through this day trading list really quick. We tried to place a bullish trade. Well, we didn't try. We placed a bullish trade on Tesla and it did not work, which again is totally fine. It's a very, very good thing that we used our risk mitigation because we got stopped out right here and we could have still been in this trade and losing a lot of money on it. So it's good to get in and get out, right? Respect your stops always. So the trade that we were looking at before I went to lunch and started stuffing my face with some beautiful chili that we made last night. I was talking about if this candle closed white, that candle right there, that would be looking for a really quick breakdown. So this little support happened. So right before I went to lunch, there were some other real life traders who did this one with me, kind of shorted with a breakdown below there, stop right there, exiting right about there for about an R and some change. So a scalp, meaning it was a very quick trade. There was no real signal other than candlesticks. That was really it. So looking at this candle, you can obviously see a very, very good support right there based from that candle and that candle. And the target was really right about here. So the risk reward wasn't that amazing. It was a quick in and out type of trade. And that usually justifies a scalp when you kind of hop in and hop out pretty quickly. Without just having a plan of knowing where you're going to get in and knowing where you get out. So anyway, that was Tesla. I didn't take that trade officially, even though I did mention it before I went to lunch. I just knew I was going to be on lunch. That's one of the downsides, right? Just trading in general, there's so many things to do all the time, every day, every time, that there's so many opportunities. We want to narrow down the ones that look the best. So I still will look for some trades in the afternoon. If we can't find any, the third hour of Mentorship Monday, even though actually I recorded about 4 hours so far. So if you're getting this, you probably have already experienced a marathon of recordings. The afternoon room from 5 to 6 Eastern Standard Time, we're going to talk about margin, buying power on margin and discussing that. Lily said, is Tesla going bullish right now? No, I'm probably going to take it off the list, honestly. So right now, you do have a bullish candle at this exact second in time. You are correct. But right now on the daily chart, this is one of my rules. So if you want to implement this rule in your day trading plan, I kind of forgot to add it more or less when we were talking about it in class 4 of the day trading section. But one of my rules is later in the afternoon, which later in the afternoon classifies after 1 Eastern. If I'm looking at a candle on the daily chart and it's a high wave spinning top candle or a doji late in the afternoon, that shows indecision. So when a stock is indecisive, that usually means it's not a great day trading candidate. So we're going to get a lot of indecisive candles for the afternoon. I'm not saying that Tesla can't bounce. I'm just saying from right here, I like it as a swing trade, honestly, at some point with a bounce off these moving averages. But for a day trade, I'm probably just going to pass on it. Could it bounce from here? Absolutely. It is at a support level. So if you look at the 15-minute chart, here's the extended hours. If I turn the moving averages off, so you'll notice we are out of support on Tesla, right about there. So you got some support here from the pre-market and from Friday's low. And yeah, we definitely could bounce, but risk reward is okay. You know, the candle patterns is okay. Daily charts okay. It's okay. And again, with day trading, one of the hardest things to battle, my friends, is knowing when it's all right not to trade. There are so many opportunities and so many things to do every single day that the challenge is not doing a lot. You feel like you want to be in everything all the time. And trust me, I know that feeling very well. It happens to me still every single day. But the realistic matter is you got to look for a trade and you got to plan it in advance. So if you ever want to know what something is doing now, you got to worry about not the present, but what's going to happen 10 or 15 minutes from now. What are you going to do 15 minutes from now? What do you want the stock to do 15 minutes from now? And then place the trade based on that. Daryl has a question. He says, so on the 5-minute on Tesla, the bullish candle that did not take out the high of the previous strong bearish candle breaking the support was your signal to take it bearish below the white candle. That is correct. Yes, sir. So I'll hop back over here to the 5-minute chart. And we were talking about that right before, while that candle was forming, we were discussing this candle and this bullish candle right here. So that happened at a support, right? So you had a big bearish candle here. That's where we got stopped out. Here's your evening star reversal. So that's a bearish pattern. So when you got this bullish candle here, and that support gets taken out, that is the signal to go bearish. Exactly. Now again, it was a scalp. It was just a quick in and out. That was based entirely on candlestick patterns, and I knew it would be a fast trade. Netflix, I feel like we did a really good exit of Netflix. So we traded this one about as good as we could have. Could have done it maybe a little bit better. Guru might have done better than I did. He was talking about the 50 EMA a few times. But here's where we got in on Netflix. You guys remember this trade. I don't think we're going to take this on the afternoon. We got in here on a pullback, and we exited more or less there for about 1/4 of an R. So it was all right. We made money on the trade. It helped us on the day for sure. What is Netflix going to do from here? Realistically, I'm watching this one very closely for a swing trade. I love this pullback in the text. Guys, look at this pullback. Look how quickly we have moved down. 2 days has pretty much wiped out 2 months of movement on Netflix, more or less. So we're now trading down to the 10. I'm watching Netflix to bounce off the 100 very close. I'm going to keep an eye on it tomorrow and sometime going into the next week watching Netflix. But as far as a day trade is concerned, I might not day trade it, but again, the swing trades, this area doesn't look bad, especially for my credit spread fans. My credit spread fans, in fact, I might as well just go ahead and kind of post this one. Give me a few quick seconds. Netflix bull put spread. This looks like a nice viable location. A quick pullback by the dip. Trend is strong. Looking for bull put spreads for July-ish on Netflix. Okay, and we've done many of those before on Netflix, but again, remember, one of the best times to do a trade is when it feels the most uncomfortable. And on top of that, the best time to do a trade when it feels uncomfortable is it will feel much less uncomfortable if you had already planned that in advance, right? So when you're dealing with a trade, you never want to trade in the now. You never want to care about what a stock is doing now. That's irrelevant. If you're wondering about the now, there's a really good chance you've already missed the trade. You got to ask yourself, what is it doing 15 minutes from now, an hour, a week, a month, depending on your time frame, right? Are you swing trading? Are you day trading? What's kind of your approach, and what do you want to do? Cool. So anyway, Netflix down here, we're going to look at it more in the afternoon, but I like the move, and it looks pretty good. Give me about 6 seconds to fire off a text. All right, text complete. So Netflix, probably not going to day trade Netflix today. Disney is the next chart on the 5-minute list, and Disney did have a breakout. We've been watching Disney. This is a good opportunity for a potential bullish trade. This has been going bullish most of the day. Had some really good retests. If I'm wrong on this trade, it'll be my last trade of the day. Let me just go back to the list. We're going to look at that, and then we'll come right back to it. Amazon. Ben says Disney could be a good swing too, in my opinion. I agree. Amazon's pulling back a little bit. Not a lot happening with Amazon, but we'll leave it on the list. There's a lot of people following it. GE is dead flat right now. Our analysis from this morning was spot on. White candle, gapped up into a resistance, and it sold off a little bit. So for those traders who are in on GE, great for the swing, but I'll take it off the list. Apple, really would like Apple to bounce off the moving average, the 100 simple. Had a good little breakdown while we're here at lunch. So check this out, this really nice, let me turn off these moving averages here for a second. So this move, we were looking at Apple earlier today, and you'll notice that it did retest the pre-market low. So there's the pre-market low, there's the pre-market low. It did break lower and came back to retest that level. You did get some evening star reversal patterns right there. You did get a small little double top right there. The most important candle for Apple to break below initially was these bullish candles right here, this one and this one. A break below those bullish candles that occurred right there, you'll notice would have actually worked out pretty well for a bearish day trade. So Apple, I'm looking to play Apple bullish off the 100 really tomorrow and or Wednesday, but for a day trade, we'll continue to watch it. I'm not in anything on Apple short term, but that is a really pretty gap. SPY in the Qs, I'm definitely not going to day trade SPY today. I like that inside day candle, but it's just hanging out right now. The Qs, really good pullback, pulled back right to the 50 EMA. So you'll notice this is the first time that we've been down, we've actually hit the 50 really for all of this year. So we're down there at the 50 Qs, quick sell-off, could be a buying opportunity on the swing trade level. So we'll kind of keep an eye on it and just see what it does. AMD, so AMD, 5-minute chart, not doing anything yet. CIEN. So I think Tev, I think you're out of this trade, right? I think Tev is out of that trade. Good trade on that one, buddy. I think you at least locked in a little bit on that one. ConocoPhillips did a little bit of a retest. Verizon, yeah, it looks ugly. And Nvidia looks kind of ugly too. So let me scoot back over here to Disney. We have a nice high of the day break. Kristen says video for moving average setups, chart setups, question mark. Yep, I'm about to get to the moving average discussion in just a few seconds, actually. Limit buy. Limit buy. 106.87 by 106.43. About 40 cents of risk. Let's make that official. DIS 106.87. Limit buy with the stop at 106.43. Okay, and I'm gonna hop over this to the 15-minute chart, and then I'm gonna look at Rick and Charles. They have some stocks I'm gonna review, and I'll start talking about some moving averages. Potential day trade high from the open house. Let's see if this works. I'll leave it open 45 minutes. Looking to play Disney long. GIS. And recently we just talked about this one bouncing off a bull put spread too, off the 200. So DIS, Disney. Ben says, I like how you set the limit buy for the retest rather than the breakout. It slows things down and takes the emotion out of the trade. I'm gonna do more of that from now on. Beautiful, man. Well, I'm glad you took that away from my setups. And yeah, that's really the exact point, is because it does take the emotion out, right? What I'm doing is the trade's confirmed. I want it to pull back, and I'm just gonna set the trade up. And if the trade works out, great. And if it doesn't, no big deal. But I do a lot of limit orders, tons and tons of them, in fact. Stop limits, limit buys, limit sells. Because you're right, it takes the emotion out of the trade. It says, hey, this is what I'm going to do. And then I do it. 106.43. I have a trader asking if I'm going to trade that with options. No, I'm going to trade this one with shares. Disney can be traded with options, yes. It's okay. It's not the best stock for trading weekly options on, but it's not bad. Daryl's not sure if you can look at TSX, but your opinion on ECTA, TO in the afternoon pullback entry. All right, I will look at that. Let me put that on the list for Wednesday, Daryl. ECA, TO. Tomorrow is going to be slammed. Tech Giant Tuesday is always very, very busy. But I can look at TSX stocks. Yeah. So I had two traders wanting me to look at their setups, and I'll put them on the list, and then I'll talk about moving averages some. So Charles says PayPal 51.95 by 52.13. So we had a PayPal entry early this morning that we canceled, and it would have been a great trade, just missed it by a few pennies. So Charles is trying again. He has a stop here at right about there, or maybe a little bit lower on PayPal. Looking to short the bearish trend right now. So I can put PayPal on the list for you, Charles, and we'll watch that one. And Rick says, what do you think about SSYS? 26 breakdown by 26.25. So he's looking at playing it bearish. The 50 EMA right there on the daily support is probably going to be a pretty nice little support area. You've already got a good little lower shadow. Here's the 5-minute chart. Volume is a little sparse on SSYS, but I see exactly what you're looking at, and I like it. A little bit of support resistance right here at 26. Here's what I would plan on doing, Rick, if you're looking at playing SSYS, is let it break down and really prove that it wants to close below that support. And then, based on that candle, based on how it closes, look to short the retest. Yeah, my brother. Great question. Great question. So let's talk about moving averages here for just a second, and we'll pull up Disney as an example since we are chatting about it. But really, there's only 5 moving averages that I use, and so that we're all on the same page, I really only use moving averages when other traders are watching. When I'm trading by myself, I look at this. This is all I look at. No indicators, just volume, candles, and support and resistance. The reason I use moving averages when I'm charting for other traders, number one, is because they can see why I'm doing something. Oftentimes, I'm doing something just purely based on sentiment. I'm looking at the candles and I'm experiencing what they are thinking, what people are feeling, how they're feeling, and play it accordingly. So just kind of an FYI. But the moving averages that I use, 10, 20, 50, exponential moving average, and I use the 100, 200 SMA. So I use the 10, 20, 50 EMA and the 100, 200 SMA. Some of you might say, Jeremy, why do you use those moving averages? Well, really, it just kind of comes down to personal preference. Think about it like this. A lot of people drive a Toyota Corolla, right? It's one of the most popular cars in America. Is that the best car to drive? Or is that the only car that you should drive? Like, no, not necessarily. There's a lot of other cars out there. It does come down to personal preference. Now, is there anything wrong with driving a Toyota Corolla? The answer is no. They're good cars. They're dependable, good gas mileage. They work really well. They don't need a lot of maintenance. They're not super expensive. What I'm trying to get at is you can use any moving average you want on any time frame, exponential, simple, weighted, ribbon, theoretical, Fibonacci, astrological, compounded. There's a lot of moving averages. In fact, there's a few dozen types of averages that you can use. I was taught when I started learning trading, a lot of traders use the 10 or the 8 EMA. Exponential moving averages are oftentimes used for smaller time frames. What would you relate to as a smaller time frame? Well, smaller time frame in regard to what I'm talking about is the time frame for your trading. Remember, I have mentioned oftentimes one of the most important things that you need to know when you're trading is what? One of the most important things that you need to know is your time frame. Sorry, a little dyslexic. Your time frame. What is it to you? What are you trying to do? Are you trying to make $100 before 1 o'clock? Are you trying to invest in the company for 10 years because you like the company and you like the product and you like investing and you'd rather be an owner than a buyer? Or is this a swing trade for you and you really don't have any affiliation or care about the stock or the company, but you want to get in and get out for a little bit of money? Your time frame is very important. You've got to understand what your time frame is before you take any trade. Now, this is an obviously easy question, but am I the one to tell you your time frame? And the answer is no. It's going to be your job, your responsibility, and your role to kind of tell yourself and determine what your time frame is, what you want to accomplish out of a trade, what you want to accomplish out of that stock. I do all time frames personally, from short term, like we're doing today, to really, really, really long term stocks I don't really care about. I'm like, all right, they'll be here in 10 years and I'll still own shares type of thing. So when it comes to moving averages, a lot of traders say, why do you use those? The answer is a lot of other people use them. That's really about it. If I used some really cool, crazy Fibonacci moving average, yeah, I'd probably be the only person out there. And the most beautiful part is, what do you guys think? Do you think Fibonacci analysis or Fibonacci moving averages work? The answer is yes. So if you did a 13.8 weighted average, that you took 13.8, time frames or whatever, sure, there will be times, situations, and occasions where the trade does work. Remember, folks, everything in trading works, just not all the time. Just not all the time. Here on Disney, really quick, though, while we're talking about, I think I actually want to lower the entry a little bit lower. I'm thinking if I should adjust it to there. 106.79 by 106.33. I wonder if I have enough time to do that. Because that would just be a little more crisp. Let's do that if we have the time. If you don't, the other entry is okay. Let's just see if I can adjust it just by a few pennies. 106.79 with 106.33. So I'm just changing things by a few cents. So you will have to adjust your entry and all that stuff. Okay, give me a second. Let me hop over here and get that done. Mike from YouTube wants to look at CHK. All right, I'll do my best to look at that in just a quick second. Now, again, this trade could work. The interesting thing is this lower shadow wasn't going to fill me at the price that I wanted to anyway, because we wanted 106.87, so it stopped at 106.89. Right, that's what we got to keep in mind is I had my original entry and the stock came down. I wanted to get filled as it was pulling back, and then it just stopped and started bouncing. I was like, all right, well, if it's not going to get filled at 106.89, which is the, 106.87, which is where I wanted to get filled in, let me lower it a little bit more then. Because what I'm doing right now is I'm just simply buying off of this old resistance over here as new support. That's really all I'm doing. Is the trade going to work? I don't know. Probably not. If it doesn't, though, I will cancel it. If it doesn't fill in the next 37 minutes. Right, so it was pulling back to my entry. We would have missed the entry by 2 pennies, so it didn't fill, so I'm lowering the entry a little bit more. Yep, got it. Mike from CHK?
No, AMD.
AMD, all right, I got it. Cool. Thank you so much. AMD and CHK on the list. So again, in a review of the moving average discussion, right, your time frame is important. You got to understand what your time frame is and what you're trying to do. You also have to understand that in the markets, all things work, just not all the time. Right? All things work, just not all the time. So it doesn't matter what strategy you are using, what moving average you are using, what time frame you are using. All things will work, just not all the time. Once you totally understand and come to grips with that, and you're like, you know what, I get it, totally fine, understand, cool, then it really helps you kind of determine how you want to approach a moving average. Most moving averages are used to help you determine the direction. That's what a moving average is really used for. Unfortunately, a lot of traders struggle with determining the direction of a stock. For example, if we looked at Disney right now, we're on the 5-minute chart, what direction would you say the stock is going in? Lydia, Jeff, anyone else? Ralph has got it. Anybody from the YouTube stream? Kristen's got it. Sideways, says Guru. All right. So most traders are saying up, and I would agree. Overall, right now on the trade that I'm looking at presently, the direction is going higher. Most moving averages help traders with determining the direction, because in trading, a very key aspect is determining the direction. So what they do, most averages, is they help traders determine unequivocally, unquestionably, on what time frame they're looking at, what the direction is. How do you do that? Well, it's termed pretty simple. If the stock is above all the moving averages that you are looking at on that time frame, it's supposed to be bullish. So for example, if I pull up right here the 5-minute chart, 10, 20, and 50 EMAs, you'll notice the stock is above all those moving averages. So if we were going to play Disney, we would be looking to play Disney bullish based on the simple direction of the moving averages. Now, are we already looking at playing Disney bullish? And the answer is yeah. So what if we hop over to the 15-minute chart? Does the 15-minute chart give us any kind of different notation? Does the 15-minute tell us that we're going up, down, or sideways? Well, the 15-minute, we're actually also above all moving averages. So the moving averages are telling us the direction is bullish. So if we're looking at playing Disney, we would have the direction, the determination, the anticipation to trade this stock bullish. We've been looking at Disney together pretty much most of the day. And during this pullback right here, right, I didn't personally take this trade bullish right there, but one trader could have. In fact, me and Ben were talking about it earlier. I mentioned this is the retest right here. This was it. So if you were going to play Disney bullish, you'll notice right here in the 5-minute chart, look how beautifully Disney trades right down to the 50 EMA, got a morning star reversal pattern, and bounced right off. If you were tracking Disney or looking at playing it bullish, could you have played that setup? Now, again, I didn't play that setup. There's no way I can play every setup that's out there. Even if I had the money to, I realistically couldn't be able to do that anyway. So the fact is, a moving average will tell you, hey, dude, the trend is bullish. If you're looking at playing it, look to play the bounce off of a moving average. That's all moving averages help you do. And again, it's all about the time frame. I have some traders out there who use a long-term moving average on a short time frame. Is there anything wrong or right of that? No, it's just simply another strategy. So here is the 100 and 200 simple moving average on the 5-minute chart. And that trader plays it very simply. If the stock is above the 100 and 200 simple moving average on the on whatever time frame he's looking at, in this situation, it's the 5-minute. Okay. In this situation, it's the 5-minute chart. If the stock is above the 100 and 200, he's looking at playing the trend bullish. That's simple, right? That's the direction. Moving averages only do two things for you. They can help you determine the direction based on a strategy, and they can help give you a location of where to do something. That's it. It's the only thing moving averages do. So you can use a moving average, any moving average you want, on any time frame that you want, combined with any strategy that you want. The challenge is from there simply following with that plan. That's really the hardest part, is just following the plan, because truly I can give you an unlimited amount of strategies based on just moving averages. Are you going to make money if you have 100 different strategies using moving averages? The answer is probably not. It's going to be more of a slim chance. Because if you are trading, there's countless opportunities everywhere. So the market rewards the specialist. You have to get really, really good at something. So what if your strategy was on Disney to only buy off of the 100 simple moving average on the 5-minute time frame? What if that was your only strategy for day trades? You traded one stock and you traded one strategy. How well do you think you would do? Well, just looking at this particular graph right here, let's talk about it. So let's say that we were looking at Disney and you want to play Disney off of the 100 simple moving average and nothing else. So I'll take away the 200 simple, and notice that trader could have bought right there and made some money. This was after hours, so I don't know if that trader would have bought there or not, but probably not, because again, I mentioned in the earlier, just a second ago, that you would have day traded buying the bounce off the 100 simple. So not going bearish, only going bullish when it trades down to the 100 simple moving average on the 5-minute chart. That was the only strategy that that person has. As an example, I don't know anyone who has that strategy, by the way, only trading Disney on the 5-minute chart with the 100 simple moving average. I don't know anyone who uses that strategy, but someone could. So that means that trader would have made money there. Again, I don't think they would have bought that because it was after hours, but let's say they did. Let's say they did buy there. They would have gotten stopped out around here and would have lost some money on the trade. And then down here, how did that trade work out for them? Right around here, at some point, they would have gone bullish and it would have worked out really, really well. So that trader whose plan is to buy off of the 100 simple moving average on the 5-minute chart, what would they do if the stock did this? And the 100 simple moving average was right there. What would they do, ladies and gentlemen? They would buy it. Now, I know you're probably thinking, Jeremy, that sounds way too easy for that to actually work. Truth is, the easier your strategy, the easier your approach, the more replicatable it is to do that. Guru says, I think you had one student who was doing that. I don't know of anyone personally. It might be you. I have some traders who do it off the 50 EMA. I don't have any traders who do it off the 100 simple and only trade Disney. To my knowledge, I'm sure there's someone out there in the world, but right. The truth is, guys, the easier your system is to replicate, the more you can replicate, the less you have to think about it. And that's what's key in trading. The more you think about something, type in one if this has ever happened with you. You plan something, the trade comes down to where you are, and now you have to look through 45 different things to figure out if you're going to do it or not. And then by the time you decide on doing it, the trade's already moved past, and you're missing out on the money. You have to be quick in trading, and the only way to be quick is to think in advance what you're going to do, make it a simple process, and then do it over and over and over and over again. So literally on Disney, all I'm doing is I was like, all right, well, it looks more bullish to me, so I'm going to buy it when it pulls back. That was it. Bullish based on these moving averages. Is it going to work or not? I'm not really sure. 15-minute chart doesn't look amazing, but I like the moving averages still. Right, so here's the moving averages. They look good. I'm gonna leave this trade alone for right now. I'll cancel it in 27 minutes. If the trade doesn't work and I lose an R on this trade, I'll be done for the day. Right, I know when to cut off. So now, if we're talking about other time frames, let's say we come over here to a daily chart and we use the long-term moving averages. Type in a 2 if you can see a few trading opportunities just by using the long-term moving averages on Disney. Now, when I say long-term moving averages, it's because this is a daily chart, and you would use those moving averages for longer trades sometimes. But again, you can create your own strategy and formulate that strategy based on whatever it is that you want to do. In this situation, you'll notice tons of opportunities just using the 100 simple. There's a resistance there. There's a breakout there. There's a bounce. Here's a few times you would have lost on some trades right there. And then you would have just nailed Disney with a break above the 200 simple there. Maybe made a little bit of money right there. Bought the bounce off there. So again, a lot of opportunities. Now, you combine that with other strategies, so on and so forth. You have an endless amount of opportunities. And again, people get overwhelmed. So the truth is, you've simply got to say, hey, this is what I'm going to do, and then you got to give it some time. Kind of like a relationship. If you're going to be in a relationship, there's times where it's great. There's times where you have to work on it. I forget I think it was the gentleman, Joel Osteen. I don't know if you guys ever heard of him, but he said he was interviewing someone who has been married for 45 years. He's like, what's your secret? And the wife said, well, the secret is I've never, ever contemplated divorce, but I've planned a lot of murders and just never followed through with them. So I know that sounds a total off track, but what I'm getting at is It's like a relationship where at some point you have to stick with it and go, you know what? I'm going to see if this works. Right? So if you pick a strategy based on a moving average, whatever that strategy is, if it's stock, if it's options, if it's credit spreads, if it's selling options, if it's buying options, if you're doing some type of blend of long-term moving averages, shorter-term moving averages, that's okay. You got to pick something. You got to make it pretty simple, something that you could explain to a 5-year-old or a 4, 5 maybe too young. Something you can explain to a 10-year-old and they kind of get the concept. Like if I bring my nephew and niece down here and I was like, hey, nephew, niece, anytime the stock comes down to this red line, buy it. Could they understand that? And the answer is obviously, yeah, totally. They would be able to understand that situation. They'd be able to understand that analysis. So you got to make it simple. You got to make it replicatable. And the reason that moving averages work is more or less a self-fulfilling prophecy. A lot of people use them. A lot of people use them the same way. Therefore, they work, just not all the time. Ricky says, I'm off, bro. Peace. All right, man. Take care. You rock. So that's really moving averages in a nutshell. Those are the only 5 that I use. Now, here's the challenge. Remember earlier I said moving averages work really well to help you determine the direction. What if the direction is sideways? By the way, since we're chatting about Disney here, just got filled on Disney. Filled on Disney, so we can see if this trade works. So this will be 2 trades I tried to buy the dip on. Tesla was the other one, and this one is Disney. So we're filled on Disney, buying this retest. So far, it's not looking phenomenal, only because I didn't really want this bullish candle to break down, but it looks better on a 15 than it does on the 5-minute chart. So here's the 15-minute chart, and again, it looks kind of like an evening star reversal, but it doesn't look terrible on the 15. So we'll see if we win or lose on that trade. Who knows? Let me go to a stock that's pretty sideways. Let me try to think of one. Whole Foods. Okay. So in Whole Foods, if I'm coming over here to a daily chart on Whole Foods, and I'm coming back in here, so Whole Foods, when a stock is going obviously sideways, moving averages are pretty pathetic. They can work. Obviously, I can point out numerous situations where you would have made a little bit of money based on the moving averages. But after all said and done, moving averages are pretty bad when you are trading sideways. And that confuses a lot of people because they're like, well, Jeremy, I thought moving averages help you determine the direction. They do. So when the direction is unable to be determined, or you really don't know the direction, or you can't immediately say this stock is doing X, Y, Z, then it probably is going sideways. Kristen says, like AMC. So let's pull up AMC really quick. I think AMC is going sideways, but I can't remember. So AMC recently, at least in the last few months, is more bearish than sideways. So we can look at this and go, yeah, it's definitely going down. Let's look at it on a bigger picture though and see how sideways it is going. So all I'm going to do is just kind of zoom out, and there you have it, right? So on a bigger picture, zooming out a little bit, you'll notice that it is going quite sideways. So here's what we have to ask ourselves. This is the big takeaway. If the stock trades down to this $20 price range, so we keep doing this, the moving averages are going to tell us what direction. If we keep trading down to $20, the moving averages are going to be going down. So it's going to say go bearish. Simple as that. The moving averages will be quite bearish at that point. All right, stock will keep going down, 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 down. If you wanted to buy at $20, would any moving average say yes? And my answer is no. All the moving averages would be bearish. You would be below all of them. And no moving average would give you the thumbs up to go bullish there. That's why you combine moving averages with support and resistance. If you are trading sideways, moving averages go out the window. Because by the time a moving average says yes, what would happen is the stock would probably be up here somewhere. You'd get in bullish, and what would happen up there, ladies and gentlemen? By the time the moving average says yes, you get in bullish, this would happen, you get stopped out, and then that would happen. How many times has that occurred? Right? Steve says it's a lagging indicator. When it's trading sideways, it's very, very difficult. Agreed. It's very difficult. So moving averages will always say no if you are in a sideways environment. And the only way to know if you're in a sideways environment is pull up a bigger picture and go look at it. So if a moving average, if you're looking at, let's say, here's another one, American Eagle Outfitters. On a weekly chart, what do you guys think? Up, down, or sideways? And remember, I teach kids every March. Remember, at Real Life Trading, every single March is Kids Month. And I show kids stock charts all the time. I help them determine, figure out what a direction is doing. And they can tell you in seconds. And they're always getting it right. One of my tips and tricks is you have 2 seconds to determine the direction. If you can't determine the direction in 2 seconds, it's probably sideways, because the direction should be pretty obvious. Is it going up? Is it going down? Or is it going sideways? Now, again, it depends on your time frame. If you're looking at this giant weekly chart, are you using this weekly chart to place a day trade? Yes or no? The answer is probably not. More than likely, you're probably not using this weekly chart to really help facilitate a day trade. But if you wanted to own American Eagle Outfitters for 3 years, would you look at the weekly chart? Yes, you would. So once you look at the weekly chart and you notice that it's unequivocally sideways, that's where you are going to look to buy low, sell high. You got it, Ben, totally. And when you are buying low, no moving average says yes. That's what you got to keep in mind. So you can throw moving averages out the door when something is trading sideways. How do you determine if something is trading sideways? You look at the chart on a bigger time frame and you ask the question. What's it doing? Up, down, sideways. And if you can't determine it, move on. That's another choice, right? If you can't figure out the direction, do one of 2 things. Email me, I'll help you. Ask some of the traders here in, when you join the trading room, you can be here in Slack, and ask some of these professional traders, hey, what direction do you think the stock is going? Or you can email me, or you can do anything else that you want to do. James says, hey, Jeremy, what's up, James? How's it going, man? Ben says, as long as you're going to hold it for a while. See, that's the thing, folks. That's, oh, man. Ben, you're about to make me go down a slippery slope, dude. Oh, boy. Let me talk about that for a second, because he brings out a great point. Ben says, as long as you're going to hold it for a while. Let's say you take American Eagle Outfitters and your plan was to buy it at 11 and then hold it for 3 years. 3 years. And that was your plan. That was what you wanted to do. Let's say when you take the trade, you're in it for 3 weeks and it's going down a little bit. Do you bail? Do you exit? Do you get out? No. Has it hit your stop? If it hasn't hit your stop, then you probably shouldn't be getting out. 3 years is a long time in the trading world. So if something happens in 3 weeks and you plan on holding that for 3 years, you're in the present. If you plan on trading something for 3 years, that is an investment. That's not a trade. Can we agree on that, folks? James says, fantastic trading room, really awesome. Thank you, James. I appreciate that, man. So 3 years, ladies and gentlemen, is an investment. That's not a trade. That means you are owning that company and you like that company, you like that product, and you spend money there frequently. That's not a trade. A trade is something from March to June or something like that. You're going to be in and out pretty quickly. So really, that's kind of my recap on moving averages. Moving averages help you determine the direction. They can be used for entries. If you create a plan that says, I want to buy XYZ off of XYZ moving average. So let's hop over here to Square really quick. So here's Square. Now, ladies and gentlemen, let's put our 10-year-old goggles on. Let's put our 10-year-old goggles on and say, what direction is this stock going? We're 10 years old now. We're looking at the chart. What's it doing? It's going up. Perfect. What if I had a plan that says when this stock pulls back down to the 10 EMA, I will buy it? What if I had a plan that said that? Would I be wrong? The answer is no, you would not be wrong. The trend is up. The 10 exponential simply gives you a price to let you know where to buy it. That's what the moving average does. So you can literally look to the right of the screen and go, oh, okay, cool, that's $20.93. So then you go to your broker and you go, boop, 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 and you type in 2093. So if it pulls back to 2093, you now know where you want to buy it based on a moving average. What if you want to wait to buy it off the 20? Okay, that's cool. Based on the 20, you also have a price, $18.94. So now you have a price to know where you want to buy it on the pullback. Jeremy, what if it never pulls back? Then you missed the trade. It's going to happen a lot. Get used to it. Move on to something else. It's okay. You're going to miss a lot of trades. I missed like probably $10 million today by itself. Here is the daily chart. Now, what if you want to take the daily chart and you said, Jeremy, I want to buy off the 20 EMA. Well, that was a beautiful time this morning to buy off the 20 EMA on Square. How would you have known to buy there? Well, remember, you can set up what's called a blind buy. Blind buy is you not being by the computer, just setting up the trade to buy off of a price or moving average that you determined in the past and you plan on doing in the future. That's what I refer to as a blind buy, or it could be a blind sell. You know, let's just call it a blind entry. Blind entry is where you see where you want to get in and you get in, and that's that. Does it work? Can it work? Yes. Does it fail? Can it fail? Yes. All of those things. Guru said, there's one really good video of your moving average, insanely simple moving average strategy. Yes, and I appreciate bringing that up. So if you are watching this on YouTube live stream or you are here, I think the majority of you have probably watched this video already. But just in case you haven't, you're more than welcome to hop over to Real Life Trading and type in an insanely simple moving average strategy. It's got 23,000 views. I think it's a pretty good video. I liked it. I liked it a lot. I like making it, and I think it helps kind of break down a little bit of what we're talking about today as well. Because again, moving averages, that's one of the biggest questions I got earlier in the room, and looks nice. Catherine, that's actually not Prasad that you know from Chicago. That's another Prasad. That's funny. So Guru, so that you know, we have another buddy of mine named Prasad. He lives in Chicago, and he's a character. So, you know, he likes having funny names and making jokes, and it's all good. Okay. He's also from India, obviously, but I think you're there. You live in India right now, and he's in Chicago. So yeah, two different people. But I know that. As long as I know. Catherine says, nice to meet you. Nice to meet you. Glad you're here, Catherine. So while we're on the topic, ladies and gentlemen, any questions about moving averages? Anything that you're thinking about? Anything that you've been wondering about? And I know I kind of gloss over it in a way. It's a very, very big picture topic. The bottom line and the most, what I'm trying to say, the most like elaborate that I can cover is simply saying, hey, pick an average strategy that you like and try it out for a while and see how well it works for you. If you're trying to make money quickly, you're going to want to go daily chart and lower. Simple as that. If you're trying to make money quickly, the weekly chart is not for you. Because I don't know about where you're from, but where I'm from, the bills come every 4 weeks, right? Every 30 days or so, there's the electric bill, there's the water bill, there's the Sprint cell phone bill, and groceries are every single week. You know, if you're trying to buy groceries, trying to buy food, that comes every 7 days or sometimes even more. So bottom line is, if you're making money quickly, if you're investing, long-term investing, my random opinion, one of the easiest things to do. Here's how you do long-term investing. Do you know how the company makes money? Do you interact with the company frequently? Do you personally buy or own their product? Do you recommend that company to other people? Are they at a cheap location to buy? All right, buy them and hold them for a while. That's really investing. Now, what if it goes lower? What if it starts tanking? Yeah, you understand you got to know where to get out if something's not right. But the majority of stocks at some point do go higher. You just got to know where to buy them. If you buy them at a really, really terrible location, then, like let's say you hop over to Disney and you go, Jeremy, I know how Disney makes money and I interact with them pretty often and I recommend people to Disney. Well, if you bought shares of Disney right here, are you buying low? The answer is no. Look how many other places you could have had the opportunity to buy Disney. Why in the world would you buy at 120 right at that resistance? Interesting. Now that I'm here, this little trend line doesn't look that bad. I wonder if this trend line will sync up. Ooh, look at that. All right, we got a new line. Okay, so that's Disney. Let's come in here to a 5-minute chart and see what our trade's doing. And again, based on moving averages. So based on moving averages, we're sitting at the 20 EMA on the 5-minute. We got a little bit of a morning star pattern right here. We need it to break above that pattern for this to work. Question, could we start moving the stop here? And the answer is yes. Other question, where would we move the stop? That's a whole different argument. I do want to lose less than an R on this trade. Honestly, I'd love to move it right there, but it might be a little bit too early. We're probably going to end up moving it right about here. My average losing trade is about 0.7 R. It's my average loser. Ben says, do you ever move your stop when you're losing? All the time, man. Yep, lose small, lose small. That's all I care about. So let's go ahead and do that. Let's put that stop right about there, 106.49. New stop. Again, one of the things that I want to ensure that we do in the room is give traders plenty of notice, plenty of notification of what to do when we're doing it. The 2R target on Disney is 107.75. That is 2 times our original risk. I don't think we get that far up there today. I don't think we get up there. And he says, how many average trades do you make every week? Day trades, 10. So here's what I'm going to say. If we haven't hit 2R in 2R before 3 p.m. Eastern, let's exit, especially if we are profitable. Nimrod says it's 107.45. Why 75? Is it? From our original entry, 106.87 by 106.43. Let me make sure I got the math correct. 106.87 by 106.43. That is 43 cents of risk. I did change the setup. You're right. I haven't updated that in the worksheet. Good call, man. Look at that. Nimrod about to get himself a frequent trader point. Very nice. Okay. Sorry, one second. Oh wow. So guys, sorry from YouTube. This is the first time I've done YouTube live stream. So there's a lot of you on YouTube have a lot of questions. So again, if I don't get to some of those, I do apologize about that. All right, so sorry, 106.79 by 106.33. 2R target is 107.71. 107.71. That was the 2R target. All right. So we're going to update that trade. And I'll leave that stop alone for a little bit. The reason I'm okay to leave that stop where it is because last time, you'll notice right here, we did bounce off the 20 EMA on the 15-minute chart. We also bounced off the 20 EMA on the 15-minute chart right there. The stop is below the 20 EMA on the 15-minute chart at present. So if this thing does, go lower and doesn't really work out that great, then maybe we'll bounce off the 20. I can say if DIS hasn't made a higher high in the next 35 minutes and we're profitable, let's exit for a small gain. That's going to be kind of my plan. Any questions on that, folks? Again, I'm not doing that just because you were here. I do that every time I do a trading plan on the floor. We come up with very, very specific situations, prices, targets, updates, all that good stuff. Luke says, how do you prioritize analysis tools and patterns? You could set up a trade based on resistance, moving averages, candlestick patterns, but soon after another pattern occurs, which predicts the exact opposite. Sometimes it's difficult to see the forest of the trees. That's why you don't want to look through forests or trees, my man. You want to climb the tree. You're not worried about looking at it. Update. So what I mean by that is you're asking a question. You're more or less saying, hey, Jeremy, I want to be certain exactly what's going to happen. That's really what your question is asking, right? Jeremy, I want to know exactly what's going to happen and when it's going to happen. In reality, you can't ever. So if you go, okay, there's a tree, I'm going to go climb it. But why would you climb that one tree, Luke? There's so many other trades, so many other trees you could have climbed. How'd you know that one tree was the perfect tree? It's like, you don't. But let's go have a good time climbing it anyway. Don't fall off and break your arm. Does that make sense, man? So as far as prioritization goes, you do have to climb a tree. You have to know which one you're going to climb before you go climb one. So support and resistance are always the strongest, in my opinion. Like I mentioned earlier, I don't even use moving averages very often when I'm trading by myself. I trade off of just support and resistance. So that's going to be priority number one. Priority number two, candlesticks. Priority number three, moving averages. Does that help, brother? It's a great question, man. Very good question. Giant upper shadow right here. Joel says, I climbed the tree during your lunch break. Good walk with the dogs. Nice, man. Hope you had a good time. Let's see. SPY. Linderman says 242.60 by 243. That's how Linderman's playing SPY. Have a trader saying, how do you use VWAP? We'll talk about VWAP more at Tuesday, Wednesday, Thursday's class. I don't use it all that often, but volume weighted average price I mostly use as a support or resistance. But I don't use it all that often. It is. I'm not saying it's not valuable by any means. I'm just saying that usually we determine our entries and stops and where we're going to enter based on where the VWAP is sometimes, on some occasions. Can you believe it, ladies and gentlemen? That day had already gone by that quickly. Notice Tesla still not doing anything, so we're going to just take that off the list. Amazon, not doing that much. Apple, things look a little bit weaker in the tech world. Looks like they're going to roll over a little bit more. So this afternoon could get kind of fun. But I will be back from 5 to 6 Eastern Standard Time. So be there for the 3rd hour of Mentorship Monday. It's amazing how quickly today flew by. Remember, tomorrow we're doing this again. We're doing this all week. Be here or be a triangle. Ladies and gentlemen, boys and girls, traders from around the world, thank you so much for being here. You are amazing people. I really, truly appreciate your energy, your support. Thank you for helping us with our mission to enrich lives. I hope you find today's content beneficial. I will still be posting a real-life stock review this afternoon, and I will see you for Mentorship Monday in the afternoon. Until next time. Love life, live life, and trade it. Bye.